Certain times a year, yeah. All right, so we got that going too. Perfect. So yeah, I can what I'll do is I'll upload this to YouTube, but I'll make it private so no one can see it, and then I can just give you the link
Problem.
so only you'll be able to see it. So um yeah, so first of all, I've already skimmed through this a bit, but I think it's gonna probably be best if we go through just step by step of,
Oh,
the uh because I think a lot of the stuff that a lot of people don't think is important, like the trader profile and everything, I really do think that is the most important. So I want to spend a little bit of time there and getting to know you and your goal and that kind of stuff as well, because I think that's very important. So um yeah, so I like that. First of all, this I thought was really cool, and we'll get to that. We'll get to that later. But I think you did a really good job on this. But I think we'll go through some of the details on that as well. But um, new- yeah. So I like that the first bit of the trader profile is talking about, things that you've tried in the past that didn't work, because I think that's really important to go over because then it will remind you. Because always you got to remember the goal of the trading plan is to be reviewed frequently. My
mhm.
trading plans on the weekend, I go through for the different instruments and everything I do, and I read all of those to make sure those are all good. So I really, really like that. Um, so, you know, right, there's a little bit cut off here. I don't know
No,
if
when I started putting the things in an email, I ask you if you see it correctly or not. When I saved it, when I wrote, it was perfect. But when I save it and send it to you, some parts get like cut off. I don't know why.
okay, do you have um the other one that works? Because I read, see it, maybe it, because it worked
Let
for
me
me
see.
too, because I remember reading through it and I didn't see those cut off at the end. Like,
No,
could it be
but
maybe could be a
I try to
size?
find it. Let me see here. I try
Yeah,
to find it, but I don't know how
yeah.
to get out here now.
I'm just trying to mess with the sizing because it's,
No, it is not the sizing. It
yeah, because this is still fillable. So,
I
um,
don't know how to get it out of this page where I'm seeing you. 50%, let me see. 50%, no. 100%. Well, there.
yeah, so that, okay,
I
so
gotta go.
that's,
I gotta go to my computer. There I go. There I am.
yeah,
Let
so
me
that's
go.
that's why it worked before because all of the text is there. So I was able to find the text. It's just
Uh-huh.
wait, how would I do? Does this work? No. Because if I take everything from here and I copy it over to there, it's in there as well. So um we can just do this for now. Uh,
All right. You can
copy.
send me to me because I cannot find it.
Yeah, sure. No problem. So we can just go through because I think it's
And sorry about my mistakes because I had the my keyboard in Spanish and I have to change. And so it was not easy, but
hmm
I think you'll understand.
Yeah, and it's absolutely fine because again, this is for you, right? The goal of
Yes.
this is that you will frequently sit down and review what it is that your goals are, and all of that as well. So, this, and I've done a couple of these so far, and there's nothing that I see that's wrong about this first section or nothing that you have to change. I do now, obviously, the where you are as a trader section, this is not only to be reviewed, but it's to be updated frequently because, the goal
Yes, yes,
is
yes. Yes.
as things go on, right, you will become kind of better as well, right? So, um, so you know, I again, I like everything about this. There's really nothing I need to add. Just make sure you're reviewing this section and you're adding to it as it goes.
Mhm.
Um, some of this stuff about I trade with the trend and all of that, that's more of things that you're going to be adding into each individual style, because what you may do over time, and what I've noticed a lot of people do, is that each trading plan should be specific for a style or some sort of execution that you're
Yes,
doing in
I
that
know.
area. So you may down the road come into a style in which trading with the trend isn't conducive for it, right? And then you have the fundamental information, and that may not be conducive to that either, right? You may end up, doing things where, maybe you start trading forex and you start, counter trend trading or something like that. So, um, you know, that's going to be anything that's technically related to the trading style you're going to do makes sense to be kind of pulled out and then put into the other sections. The main goal of the trader profile is to show where you exist right now as a trader, more so that you understand your experience level and your activity levels.
Mhm.
A common plight that traders come into is they don't know anything about themselves, and they find and I guess the best way to put this is the reason for this section is to ground the person. The amount of traders that I've talked to when I was doing trader mentoring and things like that, who would just ping pong around from idea to idea to idea and not ever sit down and say, okay, what have I done to date that in most cases hasn't worked? It's to get over those ideas and those aspects to say, hey, this is what I focused well. And I like to see this because I want to see more CMTs in the world. So good job for being interested in the CMT area. I think that'll be great if you give that a shot. Um, so I don't know. I'll copy these over anyway, just because.
No, no possible.
Oh yeah. So some of these uh aren't filling in, but that's okay. We'll just do this, and I'll just send you this document when it's done. Uh,
The CMT, what I told you is I have the book. I have a lot of other books to read also. I'm
yeah.
reading all the time. It's difficult, but not impossible. So you have to give it time and study. That's
Yeah,
the,
the,
the
the main kind of tip I can give on the CMT is if you haven't taken the Optuma uh prep courses that they have, I highly recommend those.
No,
They have
I'm into it. I appreciate it, and I send you. I don't know if an email or thanks by Twitter.
mhm.
Now X.
Oh yes.
Este,
Yep.
saying you thank you. Incredible. My first, I was in the media before, and my first, my third radio was an FM, and was called X, and was very famous here. And I spoke to my lawyers. Is when Twitter is changed to X, is there's something I could do because I have all the brand, paid for the brand and everything. I said, no, there's nothing you can do. So nothing. Leave it like that. So all right.
Yeah, good luck fighting a legal battle with Elon. He's got unlimited pockets to do with as well.
Impossible.
Yeah. So this and these are all perfect goals, right? And just like the trader checklist, these are great to review to keep yourself grounded. Um, things like some things that are a little bit conflicting is, right, are you going to trade or are you going to paper trade in the beginning, right? I would, until you're good, I would right, highly suggest paper trading. Um, and then on top of that, I love the long-term goals, with options trading and managing a trading floor, I think would be really, really cool. If you get into that, certainly let me know. Um,
Mm.
can you just tell me a little bit more about this foundation? Because I think this might be the goal to focus on. Because I
Yeah,
think it's a big one that it just seems like a big one that could help all the other ones kind of
I
land into
first of
place.
all, first of all, I paper trade and I do back testing in
Okay.
paper trading of the strategies. I've been trading already for approximately 10 years in real trading. As I told you there, I have two accounts.
Mm-hmm.
One, I manage a little fund of family and friends in Interactive Brokers. That
Mm-hmm.
here we have the possibility that we don't have taxes on anything with the US. So we don't pass
Wow.
through FINRA or through nothing. And that's one thing. And I have another one now with the now Schwab's, that was TD Ameritrade. That was my
Mm-hmm.
first account. That one I started with my mentor. That's a professor in school here. He's one of the only ones that mounted. I don't know if you call it mounted or put together a business at the university here in Uruguay. There's where it all started, and it started when I sold him a car, an old car, a classic. I didn't know him, and I never knew I was gonna get into this world, and I feel so passionate about this. And I realized after being with him that he gave me all his data and everything. Just from his heart, we have one thing in common, that we both lost our first son. So that keep
Sorry.
us real together. And he said, I give you this in case one time in your life you would like to see it, this world. And which I did. And I realized that it takes a lot of study to really do get anywhere, like in anything in life. You have
Mm-hmm.
to put a lot of time, a lot of effort.
Yep.
So I took this like, and I'm taking that now more as my first career, as when I studied. And I wake up 5 o'clock in the morning to study. I studied till 9, and then I start working, and I have, well, my family things also. And my when I go to bed, my readings and my last things I see are also have to do with this. So I'm really into it. I'm really passionate. The
Good.
foundation thing is my family comes from media communication. My grandfather was the first person to bring television to Latin America.
Wow.
He bought the things that they were throwing in the States in black and white, and he mounted the first channels in South America of TV.
Wow.
And he started as a theatrical actor. He's a composer for his memory. It's based in communication. And I said there is like a museum of communication in a place here, in a historical place that's Colonia.
Mm-hmm.
Este, where you have like, well, my father was the first person that brought the first computers to Uruguay also. So you have from the first Radio Shack computer to the first phones, and like it's a cool thing to go.
Oh yeah.
And I said, all right, I'm doing this, including, well, my family. My father has money with in that I'm managing, and I said I'm doing this, and I want to get select people from difficult how you say, resources, places, or background,
Hmm.
difficult background, este, select the people that really want to get out of there or do better, and they teach them throughout the foundation, or say, make the foundation bigger, and make with them and with other traders a trading floor where they can learn, they can be founded, they can make some money. And the best thing what most attract me about trading is not money. I'm everybody needs money to pay the debts, the 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 light, everything, blah blah.
Hmm.
But it's not my case. Thank God I could make money in my early years, and saved it. So I'm always like an entrepreneur.
Yep.
I'm always, all my life I've been managing and doing, and said, so I said, well, why don't help people? I worked in jail for 5 years helping prisoners. este, uh, Help people that really want to be more, get more. And what most attracts me about trading is the the rules, the respect, follow the rules, like
Hmm.
the consistency that mentally gives people and the soul and the intelligence to get something done and be okay. If I go this way, this won't be if I go out of my, how you say, my railway, my road, or my blah blah blah,
Yep.
I won't get to my goal. No, I have
Yep.
to follow the rules. That's why I'm so well. That's the foundation thing. Este, eh, Try to mentor not only because of the money, but more because of the mindfulness or mind. I don't know how to call it.
Yep.
That trading gives to people. No?
Yeah, there's an old trading saying that, if you want to learn about yourself, start trading, because it's going to show you all of the things that you're good at and all the things that you're poor at and where you need to recover. So that's good. And the reason I wanted to go over that is I just wanted to go. I find it helps dramatically when traders have some sort of greater goal than that. Like you said, not necessarily doing it just for the money. When I speak with traders and the goal is that money, it becomes easier, I think, for their brain to allow things akin to gambling when it's
Yes. No,
just when
that's
it's
a
just
lot of gambling.
money
Yes.
related. So yeah, the this virtual floor with this foundation where you're teaching young people, I think it's an amazing cause. There's I don't know what the schools are there, but here in Canada, and I hear it in the States as well, there's little to no personal finance or investing, education at all. They just kind of send you out after that. So I think it's a great goal. And I think keeping this goal in focus, and
Mhm.
making sure that this is, written down somewhere that you can prominently see it all of the time, and that, before you make trading decisions, uh, kind of imagining that this group of kids is watching you make decisions, will help with consistency, because that's something that I kind of do myself with my trading, right? I have two kids now, and before I place a trade, I'd be like, wait, is this something that I'd be okay if they watch me do? And it does a good job of stopping those impulsive, revenge trading and over trading and all of these psychological pitfalls that we find. And that is part of like this whole trading profile and goals is about figuring out where you are now and then orientating you to where you want to go. So these other ones, I think are great, studying past CMT exams, right? You're talking about doing things with family and other things you love. I think all of this stuff is fantastic. But these would be, I think the biggest focus on that, because I think doing, trading and investing and everything in a style that will align yourself with those goals, I think helps out everything else, right?
Perfect.
Yeah. So I think I
Perfect.
think I think that's got to be the focus, right?
All
Um
right.
so then now we get into the nitty gritty, right? So once you're kind of orientated yourself, and again, I would just focus on that, right? Everything you do is right. Is this going to help for that foundation? Because, just if you're always keeping that in focus, I think you're going to be way less, uh, you're going to be way less, have way less tendencies to do, risky things or dumb
Yes,
things. And
it's like the God speaking always and not the devil.
exactly, right? If you're doing it for good reasons, I think that'll be good. So, time for trading, right? This is fairly straightforward. So you're able to do opening bell till the close, which is great. So that doesn't really limit you to any specific trading style at all. Like you can't trade uh, Asian markets or something like that. But that's basically what we're trying to do here. And 1/2 hour before the open and 1/2 hour after the close, I think that's fine as well. I almost think this is too much work. So I almost think you should think about limiting this. And where I would limit it, if you could, is up here, right? So um when it comes to trading, as I'm sure you know from watching the markets, the middle of the day, this is right noon Eastern, and this is one of the reasons that I did it during this time. There's not a lot going on, right? Today's kind of active because of the Nvidia stuff that's going on. Um,
Yeah.
but today's kind of active. But I just think so you're talking an hour and a half, so that's 7 Eastern start until an hour and a half after the close. So that's 5:30 Eastern. That is a long day for mental exercise. And then you're saying before then you're reading stuff and for your CMT, and then after that you're still looking at the market. I do find that there is it can be overwhelming. So it's kind of like if someone told you that they were going to the gym for 8 hours a day, you kind of know that there's at least a large part of that is unproductive, right? Because you can't focus for an incredibly long period of time. If you're reading a lot of books, I think one book that's fantastic to take a look at around this topic is just called Deep Work. And the idea is how much can you actually physically
Wait,
focus
I take
and,
note.
yep,
D.
sure, deep work. So the idea is that there is, and if you ever worked in an office, you'll know there is what they call deep work, and that's when you're working very intently on a hard problem and you're thinking very hard about it. Then there's shallow work, which is answering emails and this stuff that you don't really need to be totally tuned on for. So I would pick, again, depending on which trading style you're going to start with, I would pick a time. So for me personally, I don't day trade much, but when I do, that is an entire focus in just that kind of first hour, hour and a half of the day. And then my swing trading, I focus in the latter half of the day, maybe an hour and hour and a half before the close. So then I have these times throughout the middle of the day where I'm not really looking at the market or staring at it very much. And again, I think it's a trap that traders fall into where they think there's some advantage of watching the market the entire day, when really what we want to do is we want to be laser focused for the periods of time that matter. So I would, again, I just think you're overdoing this a bit, and at some point you'll experience a tiredness or burnout, and that will adversely affect your trading. Just like if somebody went to the gym for 8 hours, the risk of injury at the hour 7.5 mark is very, very high. So
Yes, I know. I'm. It's a thing I have to correct of myself that este, also when I go to a gym, nada. I went 3 hours, 4 hours. So it's like it's something I have in like I have to change. What I
yes,
realized that generally always is most times I realize that the market tends uh, uh, to do more or less the same thing that it does in the morning, in the afternoon.
Often,
So
yes.
yes, so in the at midday, what I see is like a good place where I know the prices are between some tight support and resistance zone, where I can do the buying instead of in the morning, or obviously more late in the afternoon. That's
Yeah.
why I'm taking a look. But I work, it's not that I'm always looking at the market. I work with alarms, pretty much.
Yeah.
So what they sound, obviously, my head is not all free from the market. I'm always like, that is not good. I need some time to disconnect and say, okay, this food goes away. That's why I say I'm from the open to the close,
Yeah.
but it's something that I can manage and change and adapt.
Yeah, and there's nothing wrong with being tuned in like that the entire time, but the I always find that you're very rewarded to have areas of extreme focus and then areas of not so much. And that is right, getting out of away from the screens. It's one of those
Yeah,
clearing the head is very, very important. So make sure you're not always functioning on trading. It's the whole, sometimes if you're working on a very hard problem, the moment you stop thinking about that problem is the moment you solve the problem. And I find the same sometimes is with trading. I would be shocked the amount of um, beneficial tweaks that have come to my trading plan and trading style when I'm out in the woods walking the dogs and I'm nowhere near the computer. So just make sure that you have that time of, this is trading time and then this is not. And then I always like to preface it that, as much as we all have a passion for this, you have to keep in mind, you mentioned it as well, your other goals here as well to make sure you're not losing track of the point that you're trading to be able to do those other goals and that type of thing, right? So, reading through the stock this selection of what market you're going to focus on, you seem to right off the bat know that you're going to look at the stock market. So I don't think we really need to go too much about that. There's
right.
nothing wrong with that. Um, and it's just always good to know these as well. What you're trying to do, but it seems like you had that kind of right focused right away that you're going to be a stock trader, which is fine, especially with your time frame as well, which you're allowed to focus on. Now, um, some of these things when I read could apply to other instruments as well, like cryptocurrencies and futures and things like that, that all have the liquidity and the leverage and all and the volatility and all that kind of stuff. But it makes perfect sense to focus on one instrument now. I just know that what I'm seeing here would allow you to trade not just the stock market, but other instruments on top
Mm.
of that. And sometimes, as someone who trades everything, I don't recommend it for people right away because then there's a whole lot going on when you're watching, the Forex market and the crypto markets and all that. But it's one of those things that just looking at this, I say, okay, well, you in theory could trade anything. So if you get to a point where your equity trading is going well and you're happy with that, don't be afraid, based off what I'm seeing here, to go to another marketplace and see
So
and start testing.
the only thing that happens, like I think to many people, is that what you don't know, you are afraid of. No,
Hmm.
so I don't know the forex market. I don't know the crypto market, so except for the ETFs or something that
Yeah.
it, so, and I don't really have time to dig into it. So I said, okay, no, maybe sometime another time, but now I
Yeah.
know what I can handle.
The and yeah, I'm talking in the future here, and that's actually what I wanted to bring up when we got to this
Yeah.
section right here is that you're combining styles
Mm,
and hold times, they should be split out into three
yeah,
individual plans. But B, I would really pick and focus on a single one until you're comfortable with that. And that also relates to what I was talking about with different markets, in which it makes perfect sense. Like, again, myself, I trade all of these different markets, but each market has a specific trading plan. And I moved on to different markets when I felt somewhat comfortable in the first market. Now, the whole point of this whole trading plan exercise is that eventually, right, the idea is I would really recommend picking one of these styles. Um,
mhm.
in investing, if you're talking long-term holds for a month or a year, I think you can pretty easily combine that with either day trading or swing trading because you're not have to do too much to it. But between day trading and swing trading, I would look to pick one and then understand that when it comes time for maybe a new either time frame or security type, you go through the same process of the plan again
Perfect.
and start paper trading because then there are ways to paper trade cryptocurrencies, for example, right? So there'd be nothing wrong with, when you're comfortable in the equity market and you have systems and plans that are working for you, then going through the same process from the cryptocurrency side of things, and then starting with that paper trading endeavor because there's no risk to it, right? And then you can then either do a prop challenge account or something like that to get funded by someone else's money to trade cryptocurrencies, or
Uh,
you can
Talking
do it.
about that, since I started sharing my trades in TradeSela, they contact me of, I don't know, T3, T3
Yes, they're a prop firm in the
in
States.
in the States,
Yeah.
yes. So I think that sharing those things, I don't know who can see it, but or something because I never happened. The other ones that I made the course and I passed and after things didn't worked out because they for me there was they wanted there were too many how you say it instances like this with all the other managers of trading floors.
Okay.
Like every week was with they trade the world. Este,
Yes. Yeah.
so they have too much. Like every time you have a Zoom with them, a Zoom with. I said no, I can't. So I can't. But that was the other like prop firm that was nearby, and I worked for one here in Uruguay. That's very the most known here and the oldest one. That's called Polier. I worked for 1 year, near 2 years, more than 1 year and a half, with them in the trade desk, in the table. And but what I most miss of that is like the talking with other traders.
Yes.
Then I prefer to be alone.
Yeah.
But
No, and prop firms are a good route to go. I kind of like a lot of the challenge prop firms out there, like the Fivers and FTMO and these guys. Essentially, the model is you pay to take a paper trading challenge, and if you pass that challenge, they will fund you with
Mhm.
money and then do some sort of income split. The benefit, think guys like Day Trade the World, right? That's an actual physical desk that you have to sit on, or you have
Yes,
to, right?
yes,
So these other firms are a little bit more self-trading. I think it's a good thing to do again after the paper trading is done, after all this, but know that most of these
yes.
prop firms like T3 and Day Trade the World are more day trading focused. So that's fine if that's going to be your focus, but I think you have to pick that focus first. Again, eventually doing all of these styles, I think is perfectly legitimate, but I think focusing on day trading and swing trading at the same time can just be a little bit much. So I would work to find some,
Right.
pick one, either day trading or swing trading. When I read stuff stuff like this, more time with the family, do things I love, all that. That makes me think a little bit more swing trading because, if you're day trading, it's much more of a time sink. But once you pick one of those, and you have a track record, then I would maybe approach some of these prop firms,
Right.
after that effect. So, um,
Perfect.
so this just seemed perfectly fine for me about the trading style. Trend trading, you've watched my stuff. I always recommend it, just makes life easier than revision. But I know some people that I do, but you know, I think these need to be a little bit tighter to find.
Mhm.
And I think part of that is going to have to do with first picking the hold time and between the different trading styles, uh because it comes down to you need you need instances in and definitions of, right. So I look to trade pullbacks. Well, how do you define a pullback? Is it based off candlesticks? Is it this? Is it that? Is the other thing? Is it moving averages? Is it um you know Bollinger Bands or RSI or whatever. And the reason for that is that when things become tough, which at some point, right, something will go bad and things will become tough, it becomes important to have something that you can point to that's very, very laid out for you. So you're not thinking and guessing about, am I doing things right? The point of it is that at the end of this, what I want and kind of the goal is that at the end of every trading day, if you're a day trader, or say week or month if you're a swing trader, you go back and you compare your trades and you're saying how well did they fit what this style is. And I know you get a little bit more precise when it comes to this right here, which I think is great. The But I would just like to see a little bit more definition of this, right? I will follow trends, the upside or downside. Well, again, how do you define a trend? And if it's just price action, if it's just the very typical definition of trend, which is lower highs and lower lows, I don't think
Yeah.
there's anything wrong with that. I just think you need to put that in price action. If it is, say, a moving average or something like that, I think that needs to go in there as well. Because again, there's not going to be anything wrong where if you have multiple of these trading plans and say you decide you want to day trade and they're all for day trading, then there's nothing wrong, in my opinion, with having, I am going to define a trend in this trading plan based off moving averages, and I'm going to define a trend in this trading plan based off a Bollinger Band. I'm going to define trend, right? So you can have multiple different trading plans for multiple different styles and have multiple things to look at. But if you don't define each one precisely, then things will start getting a little bit confusing in your mind.
So what I do first, and that's for the thing you send me by email, that I need to make a checklist for each strategy.
Hmm.
It's like I don't think I'm the only one that does it. I do the zooming, no? I look at the big picture first, and
Hmm.
then go zooming in to see where I would enter. And when I'm doing the zooming, I'm also by default seeing all the things for a swing trade or for, and you introduced me by trade ideas to VWAP, and first I define trend by the moving averages and the cross of the moving averages and everything, but
Okay.
the VWAP makes me makes me realize where the trend is. And first, what I do is, all right, in daily, the trend is this, okay? And then, well, I decide, all right, I'm gonna trade this and this stocks according to my stock picking and the scans and everything.
Hmm.
And then I zoom in. But in the, as I told you, when I do the zoom out, I already see lots of things that that's why I said some things I do swing trading, because I see, okay, in the monthly, weekly, and daily charts, it is, they are saying me this, but I know it is too much, and
Yeah,
too
and
much.
just
You can never get too much.
well, and there's nothing wrong with that definition you gave. I just think there needs to be some of this here. So, more precisely, you talked about moving
Right.
averages and the crosses. You may say, an uptrend, the weekly, these moving averages have to have this reading, and on a daily, and then on intraday, and
Yeah. Okay.
and then that would then be reflected inside this trading checklist, which is again totally fine. It just makes it a little bit more precise to say, weekly I'm looking for this, daily I'm looking for this, and then maybe
Perfect.
30 minute
Perfect.
I'm looking for this, and just highlight that exactly. This is the first thing that I kind of like is uh, the exhaustion wick on a big stock. Um, and like this is the first kind of, I guess, precise numeric thing that I've seen in this section.
Yep.
So I just think more of it needs to be like that, right? And if you're worried about kind of pigeonholing yourself too much into if you're too defined with it, it doesn't give you a lot of room for discretion. You can do ranges of things, right? You could say, hey, a pullback to me is this, or within this range or something like that. So give yourself the freedom for some discretion, but you want to be able to see it because again, the end goal is to make sure when you're done your trading day or week or whatever it is more important, in my opinion, that you judge your trading against your trading plan than even your P&L, right? I would rather see a trader come in and say, hey, I lost money, but every trade I took was exactly right. And, they have the examples and they say, here's my trading plan. And then here's the trades I took, and all the trades match the trading plan, but I lost money. To me, that's a better victory um, than someone who says I made a bunch of money, but I really don't have that accordingly because there are there are three things that I can just do this. There are three things that are within trading, right? First is let's just do it like this and this and this. So there is um the and one leads to another, right? So there is the trades you take, right? The trading plan and then the profits. If you're taking trades and they match your trading plan, but there is no profits,
Mhm.
right? Then we know it's the trading plan that we need to figure out, right? If you're taking trades, but there's profit, but there's no trading plan, then if the profit goes away, we don't know what to look at. So the point is what we're trying to do is we're trying to say, or I guess also, if you're making trades and they're not based off your plan and you're making or losing money, then you don't know what to look at. It's one of those things that um, because you're dealing with an uncertain future in trading, the plan becomes very, very important because you can do everything right and lose money, and you can do everything wrong and make money. So, how you make sure that you're doing the right thing for a long period of time so you can decide whether you need to adjust your actions or your trading plan is by then, just really hammering down and kind of honing and saying, yes, everything I did is working exactly like my plan told me to do, and I lost money over a long run. Because then it's very easy to go, okay, well, then it's the trading plan that's the problem. If you're doing things that are just kind of off the cusp and you're either making or losing money, then there's no way to say my trading plan is bad or my discretion is bad, right? So that's why we're just trying to hammer this down a little bit more, which I do think there is some here as well. I do think this might be a little bit much, but it is doing a little better. So, so I like the this to me is nice and simple. The 8 and 21 EMAs, they're very common moving averages for people to use and to learn. So if one's above the other, saying that's an uptrend, I think that's absolutely fine. Um, when it comes to trend identification, I don't really know if support resistance is going to have much of a a say unless you're looking
No, no,
for.
no. That's my mistake.
Oh, that's
That's
fine.
entry.
Okay.
I look for entries when
Yeah.
the support and resistance for entries and exits, like other things, no. But one of those things is
Yeah.
I put it right there. It
And,
doesn't go there.
and this is entirely up to you, but this is there's a lot of indicators here. Some people like indicators. I would just think about how many times you would get conflicting signals from, maybe the moving averages being up, but then the MACD,
Yeah.
stochastic, that type of thing.
Yeah.
Like, are you potentially looking at too many indicators, and that might be clouding a bit of your judgment? It may
Right.
make sense to then do different trading plans, one using moving averages, one using RSI and C. And then also just track to see how many times they're telling you the exact same thing. If if all of these indicators, so
No.
for
No.
example, stochastic
Once
and
once once in a long time, they gave
yeah,
me all good.
right. And then what happens is, so we call this, analysis paralysis, right? You've got so many indicators on there and they're all giving you conflicting signals, and sometimes it's very confusing within your brain. So, maybe two makes sense. I often, something like a moving average, which is generally a trend type signal, and then an RSI, which is a momentum type signal. Combining those two things would make sense. But then, the MACD is also a trend signal. So that's, a MACD is just two moving averages again. So you have
Yeah.
two moving averages here, and then you have a MACD, which is two moving averages again here.
Yeah.
And then, right, the stochastic is going to be roughly the same as the RSI.
Yeah.
So, right, I
Yeah.
I would just think of maybe, paring that down a little bit,
Yeah. Perfect.
if you can. Um, so a pullback, I like that. Um, again, I would say this is the kind of the same thing, the
Yeah.
same issue. So for example, a pullback to a major a VWAP or a support and resistance point, I think that's a good area. And even better if it was, I'm going to look for a pullback to a major VWAP and it's a major support and resistance point. I think that would be good. But then I think, adding too much of this kind of
Together.
clouds it up.
Perfect.
The
Perfect.
liquid, this filter's fine. Like the liquidity, more than 500,000. That doesn't have anything to do with everything else. But right, you've got, stochastics and RSI, and then you have this and that and the other thing. I would just
Together.
more, right, grab something like this. Or there's nothing wrong with this as well. There's a very famous Larry Williams strategy
Yeah.
where he
Mm.
looked for a trend, and I think he defined trend with moving averages. And then he bought when a shorter term RSI, I believe it was like a 5 period or a 2 period RSI was oversold, right? So there's nothing wrong with combining that, but then if you combine that and an anchored VWAP and support and resistance and
It's
all
too
of
much.
this, it's too much. And so from reading, and this is kind of a main note I wanted to make before I forget about it. When I read this the first time, um, the one of the issues I have, which again, is very common, a lot of people have this issue, is you have to balance probability of success with number of occurrences, right? So uh, there is no point having a system that is, 70, 80% accurate. And I don't think it's ever possible to get there, but that's besides the point. But that only trades like once a year, right? You know what I mean? It's better to have a system that is 60% accurate, but trades once a week, right? Because it just in the long run, it's going to work out. It's like people who talk about like sell in May and go away, right? So even if that was true, which it's not,
Mm.
you're having this once yearly uh, system or trading occurrence, and it makes no sense. So when I see a lot of this type of stuff right here, it just means that you're trying to get very, very, very precise on when you take a trade. And I think that can be problematic because the way I describe trading is that the goal is, if we were to play a game, the two of us, where I flip a coin, every time it hits heads, I give you $2, and every time it hits tails, you give me $1. You love that game because eventually you're going to
Yeah,
make a bunch of money. So the goal that you have then is how can I flip the coin as many times as I possibly can? Because the more I flip the coin, the more I can exploit this edge that I have. And I think you should think of trading the same way, where if you instead of making that edge really, really high by needing all of these, perfect constellations to line up, if you can make a smaller edge but you can repeat that edge frequently, and it's not that confusing because you don't have a whole bunch of different indicators you're looking at. You're able to get really, really good at that. Like, because the point is that you're trying to develop a fairly robust but fairly simple system that you then become the expert at because you're pushing it. So I always use the example of Brian Shannon and his anchored VWAP. He's again an amazing trader. He's been doing it for an incredibly long period of time. Um, I don't believe Brian Shannon's edge is the anchored VWAP, even though that he's written books about it and all of that. I think
yeah,
Brian Shannon's edge is that he's been using the anchored VWAP for so long, he's mastered that, right? So it's not the indicator, it's how he uses the indicator. And the same
okay.
with I see you mentioned RSI. There was a gentleman, Andrew Caldwell, I think his name. They called him Dr. RSI, and he made many millions and millions of dollars with his trading philosophy using RSI. And again, I don't believe it was RSI, the indicator, it was his interpretation of it, right? So
Yes.
if you have too much of that going on, it then becomes very hard to become kind of an expert at that thing. So that's why I always recommend picking one or two and then
Well,
really exploiting
right.
that.
Shannon says it in the book, no, is where you put the anchor. Is the most. Is you. You
Yep.
put the where is the point. So there it is. How you use it and how you define where to put the point of the anchor.
Hmm.
So yes,
Yeah,
you have to.
yeah, it's your ability to I think I've fundamental filters. Okay. Yeah, there we are. Yeah, so yeah, it's making sure that and that's the art of it, right? Because anything that can be pure science, you're better to make an algorithm, right? So we're balancing that by making that kind of art fill as well. Um, so the stocks I don't know. That makes perfect sense to me. However, I would research for when you're talking about investing on them. Um, the fundamental side of things, I really generally don't have much to add because I don't really look at the fundamental side of things. So for me, when it comes to fundamentals, things that I may add to this section to focus on is the avoidance of news and upcoming events especially for swing trading. That's really my focus when it comes to fundamentals, that and sectors. So, since we're talking about stocks, if you look at your portfolio of swing trades and you're 100% in semiconductors, but then another company that comes up, even if you know all about them, but they're also semiconductors, doesn't make sense to add that to a portfolio, right? Because then you're stacking up catalysts. Where you're basically just combining, you have one giant position. If something bad happens to the semiconductor industry,
Yeah,
then it's gonna blow you out. And then also the avoidance of short-term or news events in the near future for swing trading. If you're looking to buy something and hold it for a week, but it has earnings in 2 days, it's to
Yeah.
me, it doesn't not something I'm going to hold because there's this binary event that's kind of occurred that's a couple days out. If you look at Nvidia today, right, you can see, if you had a short on Nvidia, you'd be doing too bad. But other than that, again, whether or not somebody uses fundamentals at all, I don't think it.
No, 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 not earnings, not AMC, no GME, nothing of that. No.
Yeah, just
Mm.
avoid the craziness. I always say we're building our trading plans to help us with the 90% of the market that is where our edge is, and then there's places like earnings and meme stocks and stuff that there is no edge. It's not going to respect a technical thing because there's this massive fundamental move that's taking place that we don't know about. Um, so here again, I like we're talking about triggers here.
Mhm.
So again, I see multiple trading strategies here that I think need to be broken out. So for one is a moving average crossover, and then we have candle patterns near anchored VWAPs, and then support and resistance zones. So unless you want all of these to happen at one time, where there has to be a moving average crossover, a bullish candlestick, an AVWAP, and a support and resistance zone, then I think these need to be broken out or simplified.
Okay.
Right? There's nothing wrong with saying, I'm going to look for something at support and resistance, but then I'm going to use a moving average crossover. To me, that makes perfect sense. But if you combine that with the candlestick and then, right, I just like the other ones, I think you're just
No,
combining
no,
too
I
much at
understand you
once.
completely.
Okay.
I understand you completely.
So no need to hammer that home. But yeah, just try to make it I used to play video games a lot when I was in university, and there was this video game called StarCraft, and it was like I always describe it as like you're playing chess in real time where you can't see the other person's side of the board. So it's a very fast paced and cerebral game. And I used to, study how to get better at this game. And you would build these kind of systems and stuff. I actually had a lot of parallels when it came to trading. Um, and one of my favorite quotes from one of my mentors at the game was, a system is not complete when you can't add anything else to it. It's when nothing else can be removed, right? So your goal is to say, how can I get my system as good as I can by making it as simple as I can? As soon as I can't pull anything out of, and it's kind of like, if you see a movie and then there's like a 20-minute scene in the movie and you're like, what the hell was that doing there? Right? The whole movie would have been fine if they pulled that out. I think it's the same thing. It's like, what can you yank out of this type of thing, right? Um,
Perfect. Perfect.
multiple one place that I think multiple conditions for exit make sense is in um this
They're
section.
fixing something beside. They have a
Yeah, I
hammer.
like the same criticisms I gave up here, I'm not going to give so much right here. When will you get out for profit? Because these things could be, if you think of them as and scenarios or scenarios, right? Here you are looking for a lot of and scenarios, right? You want this to occur, and this, and this, and this, and this, right? So you wanted a lot of things to happen at once that I don't think are going to be able to happen very often, and it's going to be confusing. But these I look at more as or scenarios, right? So, getting out a trade when a moving average crosses down, that makes perfect sense, right? That just shows us a temporary loss in momentum. Also, if it gets to oversold territory, that makes sense.
Mhm.
Just probably means it's too stretched and it's a good place to take some money off the table, right? A sudden news event, that makes perfect sense if you're in a pharmaceutical stock and they have some sort of good news and that causes the price to explode. It's probably a good place to take profit, or if it right causes a tank, looks to take profit as well. So having multiple scenarios in which gets you out of position makes sense. Just make sure there's not, again, too many, because then you're always going to be looking for an excuse to get out of your position. Where what we want to do is we want to stay in the position as long as we can,
Yeah.
and then, figure out a way to uh we want to hold as long as humanly possible, especially when we're in a good trade, right? Um,
Mhm. Difficult
yes.
also.
Yeah, well, yes. And I always say, I think exits for a profit are the hardest part of trading, hands down. It's the area that I still fight with and struggle with, um, because you're never going to be right. The only time you're ever perfectly correct on an exit of a trade is when you sell the very top tick and the stock never gets back there again, right? It's very rarely that's going to happen. So, the
In
uh,
10 years, I only bought once at the bottom of the price.
yeah,
Only one.
yeah. And at the same time, right, when you're selling to get a profit, you're never going to get out at the top either. So the question you always have to ask yourself with these exits is, are you okay leaving money on the table, meaning the stock has pulled in a little bit before your sale, or are you okay selling and having the stock continue without you?
Eh,
And which of those would upset you more? And that's kind of my philosophy on taking profits.
I, I changed that setup of mind in doing the correct trade or trying to be a better trader
Mhm.
instead of and when I started looking also instead of money at percentage, how much of the percentage went good, bad, less, blah, blah, and not in terms of money itself. It changed my point of view.
Yeah. Um, So yeah, when it comes to this section right here for stop loss, I think a more defined stop loss, it needs to be entered here as well. Everything you wrote is good, and everything you wrote is great. Um, but I think like an initial stop loss is kind of has to be put in at some point, right? You mentioned that you're going to have a stop loss, and you mentioned a couple different indicators.
Mm.
But it's like where, and this is again, I think part of the fact that there's a couple trading plans in this one
I
plan.
work with a percentage
Yeah, so
of
I
the money
see
I
I
allocate.
I saw that here. Oops. So kind of what I want to get, and I guess a good question is, does this mean that you, because there's two questions when it comes to a stop loss. So I will risk 6% of my portfolio in each trade. Does that mean that the distance between where you would enter and where you'd get stopped out, you would lose 6% of your portfolio if that
No,
occurred?
no, no, no,
No.
no,
Okay. Because that,
no,
that was going to be a no. So does that mean
no.
that where the current price is, your risk is 6% away
My
from that?
risk is my risk is 6%, and my stop loss is 0.14 of the money I entered below. No, I entered
Okay.
in 200. Well, 0.14% less is my stop loss.
So
Este,
so that's better because, right, so the wording here, and it may, again, it could be language and things like that, but I'm risking 6% of your portfolio in each trade in, the way I read it and kind of in parlance
no,
would
no.
be, right, I'm gonna lose 6% every time I'm wrong, and that would be, I was gonna very much step
No,
in for
no, no,
that,
no,
but
no, no, no,
but
no, no.
that's much better. I will say a fixed percentage away from current price for a stop loss can get a little bit dicey, just because
Mhm.
there are some securities that are incredibly volatile. I think Nvidia,
Yes,
right? Not it's not a meme stock or any. It's a perfectly valid investment, right? I still
yes.
hold some
Tesla,
Nvidia.
in Tesla also many of them.
Right.
Mm.
And then 6% on General Electric is a big deal, right? If General Electric moves 6%, that's a big deal. I would maybe look into ATR or average true range as a stop
Yes,
loss.
yes, yes.
The benefit of that is it adjusts for the actual security. The other things to maybe take a look at is there's an indicator called Keltner channels, and that's simply a moving average plus or minus a ATR, and then also
Mhm.
Bollinger Bands, and just as a place to put an initial stop. And the reason for these is that we just want our initial stop to be something that we don't have to think about when we jump from security to security to security. There may be times in the market where if the market's not doing well, that it may make sense to own a basket of utility stocks, like energy stocks and water distribution and things like this. These don't move very much. So you want to make sure you're sizing yourself and that your stop loss makes sense. When you're dealing with something like a Tesla or an Nvidia, you may want to give that a wider stop, and then you're buying less of that share size so that risk per trade is lower. And I would put that in here. So you mentioned um, point.
I did before, after the percentage, that the percentage came because of how I worked before. I worked before, I entered in a candle and I give it the room like I measured the candle before, with a wick or without all the candle, with the
Yeah.
wick and everything. And I divided it in three, and I put the stop loss at from the beginning of the candle, let's say, not the beginning, but or the end of the candle till 1/3, and then I started trailing. So what I did was more or less take the percentage of what every time I did that in a candle, was no, I'm not talking about bearish or bullish, bullish engulfing, no,
Mhm.
or normal candles, and it gave me that percentage. So that's why I arrived to that percentage, and so I don't think too much, and I do it by percentage, and I put the price instead of measuring candles and blah blah blah. That's
Yeah,
what
but
I got.
um ATR does
Mhm.
essentially the same thing, right? So like if we go to I don't know, just trading view roughly, and you can change the time frame of this as well. So for example, if I put indicator and I just put in ATR, and then say I make this, it's the standard is 14. Say I just make this 1. So what's happening is this is telling me now on, let's do NVIDIA. What it's doing now is it's telling me what this exact bar length is. So right now this bar length is $107, right? Because it's the
Mhm.
difference, that's just how big this bar is. So that might be a logical place for to put a stop loss. There's nothing wrong with doing it based off of price action as well, right? Saying that, the low of, the lowest low in the last 5 candles or something like that. It's just that static percent that I think can get people into issues, because that static percent is more of a um it's more problematic, just because it's, again, with Nvidia, a 6% move. I don't even know what this thing is going. It's up 11% today alone. So if you're trying to swing trade this, this move right here on Nvidia would have been way more than 6%. And so again, some just think of some sort of system that adjusts based off of candle style. And so I know you have trade ideas. So for example, you can put in trade ideas in I can, I don't know if this brings over, but oop, let's go there. And then do so in the single stock window, you can actually put that go. You can actually put ATR in there. So let's just grab this. We'll configure true range. So if I show this column, then right here, I now have what the average true range is in the last 14 days, right? So if I go to NVIDIA, I know that that's roughly 27, 28 bucks. So if you're looking for kind of speed in which um, to know how to adapt that, that's something that, I would just take a look at and say, okay, that's going to be roughly a way to make those trades, if that makes sense.
Yeah.
So for backtesting, again, I think manual backtesting is fine. I think there's 2 ways to look at that. Someone like myself, who's a little bit more quantitative in nature, likes to do, the hardcore algorithms, stuff like that. I don't think that that's for everyone. I don't think it has to be for everyone. So I don't think there's any problem at all just saying, hey, you're going to do it manually. I would just, make that part of your practice. We talked about maybe doing less time actually trading. So it may, fill in some of that time with, hey, I'm going to pick a random symbol on a random date and I'm going to just test my strategy to see how it works there, right? Just try to be as random as you can when it comes to trading. You don't know how much it bothers me when I see people talk about different trading strategies on just Tesla. It's like, well, right, other than this year, Tesla's been just straight up. You pick any bullish strategy in the world on Tesla, it would have done well. On Nvidia, if you took any bullish strategy in the world and did it on Nvidia this year, you'd look like a genius. So when you're doing it manually, again, just pick a random symbol in the S&P
Perfect.
500, a random
Perfect.
time frame, and then just start playing around. I think you get pretty close to an accurate answer doing that as well. Paper trading, I like this. Like this is the kind of specificity I think that is important to when you kind of go and revise this uh to take a look at.
Mm.
I will paper trade for 3 months for each strategy I use. Like that's just it's very, whether or not you're doing it because it's very, specific and it's trackable and all of that thing. Um, so I think that's perfect. I have no notes here. I think 3 months is a perfect amount of time as well because you're going to get a variety of market, right? And I guess I should preface that. Um, if you're paper trading a swing trading strategy for 3 months and the market's just been a rocket ship for that 3 months, then you may want to look to extend that to at least see what it does like during kind of one market pullback. Um, but in really, it's very rare to see the market just absolutely rocket for 3 months. Right?
No, it's
No.
been till now, no? Now you are seeing some divergence between the Nasdaq and another ones, but uh, till 1 week ago or 2 weeks ago, you see the Dow, the S&P or the Nasdaq, and they were the same charts, practically the same. Este, it was like that. Now you're starting seeing, uh, well, the SPY and the Dow a bit different from the Nasdaq, but then they were all the same.
Yeah, so that's kind of my point. So say you started back testing a long system on what's this, April 19th. And then maybe say it just continues rocketing like this and 3 months goes by and you're like,
Yeah,
okay, I'm done. It's like, no, you shouldn't be done paper trading. You want to see at least, and right, you could have, so say you're paper trading a long system through something like this, right? You would make sense to say, okay, I'm going to wait for something like this to occur and see how my system held up, right? The market in this time frame pulled back, I think it was like 6 or 7%. Did my system do a good job of keeping me out of these? Did it underperform the market when it pulled back?
yeah,
That type of
perfect.
thing. So then you can adjust from there. But again, 3 months, generally speaking, is going to be good. You're not generally going to see 3 months just complete rocket ships, but I just wanted to preface that saying you could, and if you do, make sure that you've got some sort of plan for that. So, um, let's grab that. And yeah, I'll just send you a link to this document so you have
No,
all that.
I see a lot of the mistakes there already.
Oh, it's fine. Again, it's important that you can read this, right? 'Cause you're going
Yeah.
to be reviewing this all the time. So I think TradeZilla is great. There's a lot of those. Trader View. Again, I would recommend for the cost of them. I
But
think
what I
it's
happened,
really worth it.
the first one I tried to see was Trader View, but it always took me to the link of Trading View. I couldn't find
Oh,
it.
yeah,
And I put Trade View, but it no. So I, I ended in Trade Seller. That
yeah.
este, Uh, and it's good. It's for me
Yeah.
that I did all in paper and in Excel. For me, it's like mounting a Ferrari. You know.
Yeah. So
So
the end of each day, I think is perfectly fine if you're day trading. I think you could
mm,
probably do each week if you're swing trading. If you decide to go swing trading, I think each week is good because generally gives you time on the weekend when the market's closed to put everything together and do that. But again, there's really nothing to add here because uh, as long
no,
a system works great.
the way I do day trading is because of the income that generates more quickly. Also the losses as well, no?
Hmm.
Este, but if you're doing good day trading, like I can see the more active the accounts to pay the bills, basically, than the other one that's more slowly, but also as as it is more slowly, it is more secure, no? Secure. Este,
Yeah, I would look at it more from a personality type than anything. Right? Uh I am not a great day trader, so I don't focus on that, right? It's uh there again, another book recommendation is Daniel Kahneman, Thinking Fast and Slow, and he talks about how there's different people who brain works differently, whether you process incomplete information incredibly quickly and you move on, or whether you're someone who's a little bit slower at information processing, but you need to be a little bit more precise with things. So I would just there's nothing wrong with trying both. I would just say it's whatever is going to do better with your personality is going to do better income wise, right? It doesn't matter that yes, you're right. Technically, the more frequently you trade, the more frequently you can compound gains to grow an account or to make an income
yes,
a little bit better. But all of that doesn't matter if you end up having, the mental pitfalls of day trading and things like that. So at the end of the day, it's the old question of people saying, "Hey, what exercise is best?" It's the exercise that you'll do, right? Trying to
mm,
figure out, hey, what's the best diet? Well, it's whatever you will stick with and eat well. So I wouldn't focus too much on which has the potential to make or lose money. I would focus much more on which fits with my personality, right? Because going back right up here, uh,
yeah, yeah,
it's making sure that if you're miserable, and you're, stressed out all the time because maybe your brain doesn't work with day trading, or vice versa, maybe your brain doesn't work and doesn't like holding things overnight or for a long period of time, then it's going to make all these goals way harder. So again, I wouldn't look at so much which one's better. I would look at it more
which is
which fits most with my personality. For me, again, it's swing trading because I'm very good at when the market's off, analyzing things and putting that analysis into something that is easy to understand. It's why I do the videos and the Substack and all of that because I'm good at taking all of this information and boiling it down into something that makes sense and then coming up with a trade plan for the next day. What I'm not good at is receiving a whole bunch of information on the fly and making decisions based off it. And that's why I don't think I'm a very good day trader is because the, in day trading, you're looking at what the market's moving, and it's just a lot of information coming in at me at once. And I'm more of where, I need to sit back and kind of go through things
yeah.
slower, right? So again, I would focus from that side of things. Um, so yeah, I would just go on when you'll adjust your trading plan. I would put a time frame on um, if the trading plan is working, not working for. So if you're a day trader, I would say like a month. So, if you have a down month, then it's time to revisit your plan. If you're a swing trader, maybe it's a down 2 to 3 months and then just have some. The point is to kind of have like a moment in which you're saying, okay, I have to sit down and review all this because something is not working. and I have to go from there. Uh,
Right.
because yeah, you just need you don't want to adjust. So adjusting the trading plan becomes uh kind of problematic in the sense that there are some people who after every trade will want to go back and adjust their trading plan, right? They lose on a single trade and they want to go back and tweak things and say, oh, well, if I had waited for this to occur, then I would have made money on that trade instead of lost that. I don't think that's the way to do it, right? I don't think that's the ticket because again, we're dealing with this uncertain world. You can do everything correct and you're still going to lose in 3 to 4 of every 10 trades. Um, there's another side of that coin where people will take loss after loss after loss and drawdown after drawdown and then not have a plan to go back and say, okay, maybe my trading plan isn't working. So finding some sort of either um, numerical drawdown, which would make sense. Some people will say, okay, if I'm down more than 5% on my account, I'm going to sit and think about whether it's time to adjust my trading plan or a time in drawdown, right? If I haven't made money after 2 months, it's time to sit down and say, okay, maybe my plan is no longer working. So just something a little more concrete there, I think makes sense. Um,
All right.
Yeah, so like this, for example, I really like. The if everything hits the fan, the whole I will take a week or a month off. Again, I would um systematize that. Some brokers you can actually call and they will have hard stops for you that will stop you out for a period of time. But I do like the idea of, I would say if you're day trading a week, if you're swing trading a month, I think are good numbers too. I would just have a when you're going to do that. So, maybe that's 10% drawdown, maybe it's 20% drawdown, but at what time do you just kind of unplug everything, go to cash, and then take a week to review and to reassess? Because doing this kind of planning is in advance is paramount because in the moment it's really hard to pull yourself away. I'm sure you felt that before as well, where
Yeah, no,
uh, you know,
of course, yeah.
you're in the drawdown and it's probably the best move to take a step back and to not do that or to not trade anymore, to not do anything.
Yes, but
Um,
you always hope that something will turn around.
Right. So I would systematize this and say, at this drawdown point, I'm not allowed to trade for a week. I actually recently, in one of my prop accounts where I was trading Forex, I hit I think it was about a 4% drawdown, and 5% is my kill everything for a week, and that's in my plan. So as soon as I got near that, it gave me the freedom to say, hey, it's in your plan. You should go to cash. You should, walk away and do something else. And I did that for about a week and a half. And then since I've been back, things have been back on track. But if I didn't have that in a plan, I could still continue to be trading. I was, my trading plan was correct in the fact that uh I was doing everything according to my trading plan except I was on too low of a time frame, right? But going through that week, what that week gave me is I went through the last 6 months of trades, which the last 5 months were very good, and then that 6 months I had a drawdown, so I was able to go through all of those trades and see what happened. And I went from looking at almost exclusively daily charts to going into a 4 hour or 1 hour chart for the same strategy. So it gave me having that week off. The first couple days, I was just kind of mad. And I was just walking around the house mad that I was in this drawdown. But then that the end of the week, I sat down, and that's kind of when I went to uh, I went to cash, and at the end of the week, I was able to go and review everything, and then I found the problem. So when I came back from that, I went back to daily charts, and things have been doing well again. So just have a hard kind of a hard rule, and make yourself accountable to these as well, right? If you've got someone in your life who knows what you're trying to do, then tell them. right? So I even told my wife, I said, listen, if you ever walk
I,
by, good, because we know they'll kick our ass, right? So I walked by and I said, Jess, to my wife, I said, listen, if you ever see me looking at an intraday chart ever again, just slap me, right? Because I'd been doing well for so long, and then I changed time frames and I was doing poorly. So
there was a saying of I think was Benjamin Franklin, that if you want someone to tell you the truth, ask your wife.
yeah, yeah, that's why that trading that the free course that I did, I thought I brought my wife on because I knew that when
I saw like 4 or 5
yeah.
of them. You were younger.
Yeah, less of this. This was 2020 is when we did that, yeah. But yeah, they because yeah, she could call me out when I was talking too much, too pie in the sky stuff instead of down to earth. Um so now we're into the trading checklist part, which is great because we're gonna have a little bit for any questions you have. Now, the way I read this, and correct me if I'm wrong, the game plan is to, you pick a time frame, and you kind of highlight whatever time frame that is, and
Yeah.
then you go through the individual markets and the sectors, which I like all that.
Yes,
I
some things, depending on the time frame, I pick go or don't go. I fill them up or I don't fill them up. Not all of the stuff there goes for all the time frames,
okay,
or, all the strategies. No, I try to make one that try to fill anything, any strategy or time
yeah.
frame I choose, and then I said monthly, okay, and that way I feel the what I see monthly. Este, that's the only thing that I have to say about. But that's everything. I know it's too much. I put you in an email, but that's everything. Like, all right, if all as you said, if all the planets put together and blah 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 blah
Yeah.
blah, this well, this will be my 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 thing that has to be all ticked, no? But
No,
it
I
doesn't mean. Dale,
I
sorry.
I like this. Now, what I'll say is that uh you know you're right, some of this, depending on what style you land on, won't be relevant. So for example, if you're day trading, who cares that utilities are up or down for the day, right? That won't affect your day trading of Nvidia that just had earnings, or something like that. If you're swing trading, this stuff will matter a little bit more. Again, just more definition, right? With what does bullish, bearish, sideways, like, how are you defining that? Just make sure that's noted somewhere, because again, there's one thing just to look at the chart, but just some sort of definition. If we're using your 8 and 21 EMAs, you may define bullish as the 8 is over the 21. You may define sideways as, it's crossing back and forth, and down is the 8 is under the 21. And define those. Certain of these sectors aren't going to matter too much, but it may help if you're trading something in those sectors. So, for example, XLU being utilities, that is common to be down when the market is up, right? It's common that sector goes up when the market goes down, because people want, if they're worried about the economy as a whole, they are more likely to buy utility stocks, to buy
Yeah,
um,
gold and silver also, no? Gold, silver.
exactly, like defensive names, like, hey, everyone's always going to pay for their power. The power company pays me a good dividend, so if I'm worried about the economy, I'm going to put my money in a power stock. So just know some of those relationships.
There's some divergence there, no? Right now, no?
Yeah,
Este,
well, and actually, one of the models that I'm working on includes that XLU as an input, the XLU versus the SPY. because yeah, it's a little bit weird. I've heard the argument that it might be people are saying that it's kind of an AI play, that AI utilizes a lot of electricity, so people may be buying electric
Yeah.
utilities, and I'm like, okay, that might make sense, but again, I don't I look at the data, and historically, it's kind of problematic when utilities are outperforming.
But
Um,
AI
yeah.
talking, talking only, AI must consume, I assume, less than making crypto
Yes.
currency, no?
Yeah,
So,
it consumes way less, which that was kind of my counter argument because we didn't see this utility boom during any of the initial crypto
well,
booms. So yeah, that was a bit I was like, I don't
I,
know. But
I I have a friend that was making crypto here in Uruguay, and I have two offices in Montevideo, that's the capital from Uruguay. I live in Punta del Este, that's like a resort. Este, and he started with these machines doing the mining thing, and this is a big building of all offices, offices everywhere, like 15, 20 floors of offices,
hmm
but they he the lights all well
yeah,
when he
they drain a lot of power. So yeah, that was my counter to saying, hey, if that was true, you'd think there would be this, but yeah. So again, keep that in mind, right? Just because, if you put everything here as green, then it might kind of put your head into saying, well, everything's green, that means good. Then you may look at it and say, oh, well, utilities being green, might not be great. Um,
perfect understand.
where you get the tickers from, um, may be important, but because your trade plan was very, very technical. I don't think they're that important because I'm assuming
Mm,
this is what this is where you're getting the tickers from.
yeah.
Um, but I would be more
For
interested.
example, in well, Trader Diaz, Transpider, Metastock, I use the scanning,
Hmm
and I scan for I have already my strategies, and it scans for what I want, and it throws me the tickets. The other ones, Motley Fool, ATG, that's Mampili, uh, they gave me what tickets about more fundamental tickets,
Yeah,
and I read more about that. Mampili not so much fundamental because he's more like these new stocks like bio blah 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 that you don't know much about them. But I followed him for a long period of time. So I tried his new how you say, his new business, that this ATNG. I'm
mm,
trying it only.
okay,
Motley Fool, yes, I know them. Sachs, I know them also. I follow them for a long time. And they are like the old school, no? Like,
yeah, they're,
so,
they're,
social media, well, Twitter, Reddit, blah, 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 is something like,
yeah.
it's like flashing. I look at it, but uh,
Yeah, I would be less concerned with, especially, so again, it depends on what time frame we're talking about. So, for example, if you're looking to day trade these symbols, I really don't think it matters where the symbol comes from because, if the Motley Fool
yeah,
thinks that, they're going to make a lot of earnings growth, doesn't matter for a specific day trade. And because your scanning is very technical, I don't think recording so much like so I would almost rather see this area get a little bit replaced with why you chose, that particular stock from that setting and more data about the stock. And the reason for that is that you can go through and check them. So things like relative volume. might be,
Mm.
instead of saying, hey, this came from trade ideas, might be more important to say, hey, this is doing 3 to 4 times relative
Oh,
volume,
perfect. Ah,
right? So then when you're going back and reviewing, instead of saying, oh, all the tickers from trade ideas worked, well, that doesn't really matter because you're trading them technically. So it means that your technical plan worked. The more data you have on the stock, you may go through and say, hey, every time I trade something with less than one relative volume, I'm not doing well on it. So, right, to reduce, because at the end of the day, your goal is to then be able to reduce those down to say, hey, this is how do I remove a lot of the trades that aren't serving me? They're not in the long run making me money. So the more buckets you can create to put trades into, I think the better it is.
perfect.
A note section's great. It's good to write yourself little notes. So then per each ticker, this is actually, again, I really like this section that you make. I think, way better than this one up here. I think this one is good down here as well, where, you put in your ticker, again, as I mentioned before, some sort of definition of what the trend is, like just how you're defining this, I think would be a good thing. But yeah, I like all this. I like the candle pattern. I like, if anything, might be almost a little bit um, too much detail, but
Mm.
filling out something like this makes me think that you're really doing the work. You would be shocked. I would say 99% of people who try to trade don't end up doing this for something that they're planning on trading. Now, what you'll notice is the people who don't fill out something like this physically, but trade, they do all of this mentally. And that's going to be the goal, is that eventually you don't want to have to do this on every trade, but you're just doing it. You're going through the same checklist in your head. The idea is to kind of, do this for years until you're able to do that. But I think that's fantastic. So the only kind of changes I would make is, trend. I would almost define trend on the different time frames. So, right, daily trend, monthly trend, weekly trend, and then again, how are you defining that trend? If it goes overbought, right? Um, how are you defining that as well? Maybe just put, in brackets or something. Oversold, how you're defining it in brackets.
In overbought and oversold, I have two formulas that my teacher made like 6 years ago. That they put them. You can put your formulas in TC 2000, in TC 2000,
Hmm.
and it's like it opens like. It has some peaks of oversold and overbought, and then it opens like a big, how you say, like is rectangle, a big rectangle when it starts the overbought, depending on the time frame also, no?
Okay.
You can do it in any time frame, and it's like a gray or red. If it's oversold, it's red, and as long as it lasts. So I keep using it and it works. It's really good.
Okay, yeah. So if that's where you're going to use to define it, then I think that's totally fine. I think you just kind of make notes of this system. I would take the exercise at some point to try to figure out how that is mathematically derived. I think it's very important. I think if you are to use an indicator, it's important that you know exactly what the indicator is telling you. I think that's just wise from a longevity point of view. But again, there's nothing. If you're going to use that indicator, there's nothing wrong with that. I think you just put it in, and then of course, this I don't think you're going to be using as much because the conversation we had earlier, where you know um, this type of stuff is fine, but I don't know if you need a MACD and a stochastic and an RSI. So I
Yeah,
think you can kind of limit some of these as well. Um,
perfect.
you know, entry. I'm less concerned because the you got to remember the point of this is before you take the trade, this should be filled out, right? You're going through the checklist to try to make sure that that the symbol that you're looking at is congruent with the trading plan that you made. So everything in there, what you decide on with your final trading plan, is in the checklist. So if you're looking for a moving average crossover, right? Your entry is not so much the dollar sign, it's, is the moving average crossing over, right? Because this is the final, you know, it's a pre-flight checklist is kind of the way you look at it, right? Am I okay to fly today? They sit there and they go, okay, let me check the weather, let me check the flight path, let me check the fuel, let me check this, let me check this, let me check this. And then when everything goes, then away you go from there, right? So the entry and the stop loss and all of that and the target is used to figure out your position size, which is great. I know that's why you have that down there, but just somewhere it should just say, right, the entry is because of this moving average crossover, just for an example. Is that moving average crossover happening? Yes or no? And that just might, go right here. Because again,
Okay.
it's more about the end goal of this document is to give you permission to trade, right? Is that if you can't go through and tick all of the relevant boxes, when it comes to what's the
Yeah, you're
trend
gonna
for,
be, yeah, perfect.
right? So it's like, okay, all of these boxes are tick. Now I can hit the button and I can go. So that's the goal of it because again, the mental exercise for this one in the long run is that eventually you do it in your head.
But
Yeah,
in
and
my head.
so I'll look at a stock. When I bring up a stock, for example, I was looking at this HIMS earlier in the day. Uh, the mental checklist I'm going through, I think it was an anchored VWAP pullback or something. Yeah, so I'm seeing it around 15, right? So I'm doing the mental checklist of, what's the average volume, right? Is this thing in an uptrend? Where's the area that I'm looking to get involved in, right? What am I seeing based off, and so in my head I'm going through this, and then I'd probably look up something and say, well, what's the market doing? And the market looks kind of awful today. At that video I made yesterday, I don't know if you saw it, but I put the Dow. That looks like that's going to be a good call on that one.
The, what time frame is that one?
This
That
is
you
daily. Yeah, the Dow's
they,
just falling apart. I did a
well,
video
Alejandro,
yesterday talking about how the Dow was kind of worrying me versus the Qs. Um, but it's so again, just to go, I'm going through this checklist in my mind with this HIMS trade to say, okay, there's a lot of things here that are interesting to me, but then one of those is check up on the market. And the market to me, this is so far, if we close right here, this is a bearish engulfing candles at high. This is a little bit worrisome for me. So all of these things together would say, right, no trade. And that's kind of the goal of this as well, is you're basically trying to find an excuse to almost not take the trade based off your rules. But if at the end of the day all of these are check marked, then okay, well, it's I'm good to trade.
you
And that
you only go long.
no,
You
I short as well. I do a lot of trading. Uh, I don't know what your equivalent would be, but it's an RSP account up here, so it's like a tax deferred account, retirement account, because we have to pay the taxes that it seems like you guys don't have to pay up here. So
no.
when I don't like shorting individual stocks, I guess is the long and short of it, because there's nothing stopping a company from coming out with insane news and or a
Yeah.
buyout and doubling overnight. So what I do a lot of yesterday when I did that video, my video is basically saying, hey, the Qs look great, and this is if we're looking at yesterday's candle, but the Dow is worrying me a little bit, and it was on this candle. So I shorted, what was it Dow?
Pick one that
Yeah, it was a bad day. Forget the ticker short Dow. Yes, SDAO. That's it. So what I do is I bought this. So this is just an inverse ETF of the Dow.
yes,
So I
like the SQQQ.
right, but because I noticed the Dow was the weakest of the securities, and I'm holding a bunch of long trades that at the end of the day, because that's part of my trading plan, is I don't look at them until the end of the day. I have to go look and see if they were stopped out or if there's any of these I have to sell. So what I did is when I noticed the weakness in the Dow, I bought this security on yesterday's close. The idea being that if I was right and the market pulled back, my theory was that the Dow would get hit the hardest. just because the Qs and the SPY were holding up the best and the Dow was doing the worst. So that's just a hedge that I put on. So I do short, but very rarely individual securities. And because these SDAO, these products are leveraged, and I'm only in them for short periods of time, the amount of capital I have to allocate, right? If I were to short the actual Dow ETF, the DIA, um, it's a $400 security, and if I wanted to get enough to short, I would have to apply a lot of capital to it, because at least the brokers up here, they charge extra capital requirements for short positions because of the
Mhm.
inherent risk. So by buying this security, I could spend less capital and less buying power and
Perfect.
get the same equivalent hedge on the other side. Now, if I was option savvy, which I noticed that's one of your goals, it's one of my goals as well to get better with options. That might have been a moment where you buy some put up contracts or something, but I always want to do things as capitally as efficient as possible because it means that I have more capital to do other things, take uh, day trades or whatever. So,
Uh,
so yeah, that's the trade that I took on this guy. So, but again, you can see the checklist when I was talking about this HIMS trade. You can see, or we can even do the anchored VWAP pullback one. The I don't know if we go to Oxy, right?
yes.
So,
Center Petroleum.
yeah, like this is it's the checklist of, okay, Oxy, I know Oxy is liquid enough. I don't need to worry about that. Is it in an uptrend? Yes, it's in an uptrend for my time frame. So I'm doing all the things that you should include here. I just have been doing them. I'm just doing them in my head. And that's the goal is eventually you want to go through and do these in your head. So you want to make this in a style in which it's easy to memorize. It's going to take a couple months, but the goal is eventually you're going to have a slew of trading plans, potentially across a slew of instruments. So you want to make sure that you can kind of in your head recall, okay, I'm doing a moving average crossover trading plan. Therefore, I'm looking for this, and this, and this, right? And you're going down that list and saying, okay, I know that I need uh I need the liquidity, I need the volume, I need the candlestick pattern, and go from there. So that's how the feedback I think totally on this is just to reconstruct in a way that
Perfect.
you can just tick down easily before you take the trade. And then maybe have a note section down here for after you take the trade. Or I guess that could be this section right here, or another
Yes.
note section for
Yes.
after.
And
Um,
take some things also
yeah, and say,
out.
hey, I should have done this better. I should have done whatever. Because the goal is if you do one of these for each trade you take, at the end of the week or the month, you'll have a lot of these. And what that gives you is your own personal data, as opposed to going through and back testing market data. You can now go through and you can say, these are all the trades I took, whether they were in paper or live or whatever. And you start to go through them, and maybe you start to notice the note section says, um, you know, I knew I shouldn't have taken this trade at lunchtime. And you notice that there's 10 of those throughout the week. Well, that's data that you take in. You say, you know what, at lunchtime, maybe I go grab a beer. I just go do something else, right? And that's the point. That's the point of all this is that at the end, you end up being your own kind of self-learning
Yes.
mechanism, right? Where you're saying, I'm going to take in what works and I'm going to discard what doesn't work, and then I'm going to kind of get better as we go. S-
Impecable.
Cool.
Perfect.
So you have any questions? Anything else you want to go
Michael.
over or
Perfect. No, no.
okay.
Perfect. Este,
Well,
perfect,
listen,
perfect.
when you make the changes, if you want to email me again with what you got, I'll take a read
I'll
through it
do
and
that.
I'll send you back I'll send you back if I have any further notes.
All right. What I don't know, it went off my mind. So give
Well,
it.
you have my
Uh,
email now, right? So if you think of it,
oh,
let me
yes.
know.
Yes. How old are your kids?
Well, one is a month old, and the other one is 2 years. So it's a
Yeah.
busy household. Yeah, there's still a
Yes,
lot of work, but
I have one of 12 este, 10 and 5. So also,
Almost
it's,
almost a teenager with one of them. That's
yeah, he's with me right now.
well, it remind him to be nice to you when he turns into a teenager and gets all the teenage angst going on.
Well, you will get to it.
Oh, I am sure. I'm in trying to enjoy the moments when I can because I always say, okay, they're going to be a teenager at some point and they're not going to like me very much. So, it
No, do it, do it.
ex exactly.
Put it on your trading plan.
Oh, that's great. Well, awesome.
Well, Michael,
It was amazing
thank you very
talking to
much.
you. Email me if you need anything, and I'm sure I'll be talking to you soon.
If you come to Uruguay in summer, you're invited.
Oh, I would love that. Maybe if
All
I go
right.
anywhere, it will probably be during the winter when things are freezing out here. That's when I want to escape Canada.
Well, your winter is our summer.
Oh, perfect. That sounds great.
So you can come here. I have a house separate from my house. So you're invited. All right.
Awesome. That'd be great. I will this recording again, I'll upload it and I'll send it a link to you a little bit later today or tomorrow.
Perfect.
Awesome. Have a good
Have a good
one.
day. Thank you.
Bye-bye.